This is Pete Moore on Halo Talks NYC. I have the pleasure of having a 17-year friend, John Klein, Pause Studios. We're going to talk about workout recovery. We're going to talk about growth, and we're going to talk about the power of the people in the franchisor. John, welcome to your first Halo Talks.
Pete, great to reconnect with you, and I'm excited to talk with you and share our story.
Awesome. So you just launched the FDD and are bringing on multi-unit operators, which is a great trajectory. Why don't you talk first about your experience in the health club space, your focus on real estate, how important that is, and that seems to never change in any good business. Location, and how all that kind of gives you the right to be a franchisor and basically say, look, I got a playbook. I'm going to help you get the right location, and then we're going to roll.
Yeah, absolutely. So a little bit of background on myself, as you know the story, been in the health wellness space for almost 2.5 decades. Started my career at TSI in the late 90s as the director of development and acquisitions there, and helped scale that company from 30 units to 130 units up and down the Eastern Seaboard, and then moved over to Equinox, ultimately became the SVP of real estate there. Joined at 10 units in 2001 and helped scale that company to 100 plus units. Before I left, along the way, we acquired SoulCycle with, I believe, 6 units at the time and scaled that to 95 plus. So most of my career has been around growth, strategic planning, running real estate teams, running that process, design, development, construction, and smartly scaling businesses. How that translates to, Pause is we've selected 5 amazing corporate locations in Los Angeles. 3 are open, 2 more will open in the next 6 to 12 months in, where markets where there are already Equinoxes or Barry's or Souls or OTFs. So already proven trade areas, just kind of pulling out the Equinox or SoulCycle playbook for the corporate locations. But now that we've launched the franchise model, I have the playbook, and my team has the playbook in all the major markets for a given franchisee. Let's say in Dallas, Texas, or Austin. We've done the research. We know the demographics. We know the psychographics. We know where the comp set is, whether it's Equinox or Whole Foods or SoulCycle or Barry's or OTF. So we know the strong zone there, and we have the team and players to execute on that. We have local brokers in the ground that will ultimately connect our franchisees with, will help them select the best trade area and the best real estate in that given trade area.
When you look at real estate selection for whether it's LA Fitness historically or whether it's what you did at Equinox and at TSI prior, the location, no one's ever said to me, I got this shitty location next to a Whole Foods or next to a Trader Joe's or right off the 405, with signage. So, obviously some of that you can get out of a Buxton report or you can get out of some of these softwares, but take a minute and just kind of educate us on maybe some of the nuances of how your brain has either been able to optimize that, or like you're looking at the data, but the data is not telling me what the next development is, or there's 1,000 new apartments going up here, or there's new traffic flows, or what are some of the things that maybe people don't think about that you think about?
Sure. I mean, we always said, back in my days at Equinox, there's the 50% is art and 50% is science. Sometimes it's 70-30 or 30-70, but there is the art and the science, and there's the empirical data which are the demographics and the psychographics, but then there's the anecdotal data, traffic patterns, future development, pent up growth in a market with future units or offices being built, psychological barriers. I remember when we were in the early days back in 2003, I'm throwing it way back. We were very interested in opening up a site for Equinox in Santa Monica, and we had a site presented to us right off the 3rd Street Promenade, but some of the feedback was only tourists go there. Well, we did a lot of analytics and ultimately did a phone survey with 100 local residents who live in that trade area, and the majority have said, despite that being true, that the promenade is largely tourist, we would go to that location, assuming parking was good, visibility was good, access, ingress and egress was good. So we ultimately pulled the trigger on that location, opened it up, and that was a home run. So you got to do your due diligence. So the empirical data, the demographic research is kind of the divining rod to get you into a certain trade area. But then you really have to, speak to the local residents, potentially do, market surveys to really hone in and make sure you're making a smart real estate selection.
Yeah. So when you take a look at, when you started Pause, and we talked about it at its inception, you were doing a lot of float tanks and you were testing out some new technologies. So to the entrepreneur out here that wants to set up a company and, launch in 90 days, you've been very methodical, taking years to kind of figure out, okay, what's the modalities, what's the unit economics, what's the pricing model. And now you're basically allowing other people to use your playbook, which might be called Pause, but it's really called John Klein, to your first 50 franchisees, right? Or like there's a personal connection. So you want to make sure that they're successful, and that'll in turn you to be successful. So talk about maybe some starts and stops, or, when you said to yourself, hey, look, I know I got a great model. I know I'm in the right area and there's a lot of growth, but I don't have the special sauce kind of figured out yet. And now fast forward and I'm ready.
Yeah, that's a great question. So we launched in 2016, and actually the name of the brand at the time was Pause Float Studio. It was a float centric business. We had 1 or 2 infrared saunas, and then being the curious, smart business operators that we are, we always kept our ears and eyes to the ground for new modalities that might resonate with our clientele, our constituents. And we created the space with flexibility where we could pull in or pull out certain machines. So we had a lot of learnings from 2016 until opening up our second studio in 2021, April 2021, which is a whole separate story. And we learned and we studied and we spoke to our members, and we looked outside what others were doing, and ultimately came up with a incredibly successful model that has 6 different service modalities. So 6 different revenue levers. Think about it that way, you can pull on, plus retail. So the new model going forward, the units that we're opening up today, both corporately here in Los Angeles and the franchise template, will have flotation therapy, infrared saunas, cold plunges in the same room. We're the only, nationally expanding studio right now that has dedicated contrast therapy rooms, which is moving between hot and cold in the same session. Normatech, which people have, as you know, your favorite modality. We have nurses on staff to do vitamin IVs and intramuscular injections, and we're going to expand that to more elaborate services over time, and cryotherapy plus retail. We have about 100 SKUs on our shelves, all products that align with our services, that align with our overall initiatives of solving for stress, sleep, anxiety, athletic recovery, detoxification, immunity optimization, which is more relevant than ever right now with COVID. Our IV business is a tremendous business. A lot of people are getting our specific immunity IV to just make sure that their immune system is strong as possible on a daily basis should they encounter any sort of foreign substance coming their way. So yeah, it took a while, but we honed it. We've locked it in. Our business locally here in Los Angeles is thriving. On a 4-wall kind of brick and mortar business, it's really doing exceptionally well, which is why we've been able to raise, almost $5 million in the last 15 months and grow and scale here corporately. And we started launching franchise 3 weeks ago, and the number of territory checks and the number of candidates already coming through our pipeline, our lead pipeline that we were using with Repum, who is our growth agency, if you will, is off the charts. The demand is huge.
That's great. When you take a look at someone who is assessing different types of franchises, maybe they're not, wed to workout recovery, but they're just trying to find a franchise platform. What would you say besides, your background on the real estate side, the fact that you have several corporate units? What else would you say is, look, this is why you should select us as your partner?
Yeah, great question. So, in other words, what is our moat? What is our differentiator? We get that question all the time from investors and, people who are interested in learning more about our business. You have a management team in place. Myself and my partner, Jeff Ono, who was at Sports Club LA for 15 years. And I got to know him after Equinox acquired that brand, and he came as our regional director of marketing. So he and I collectively have almost 40 years of management experience. We just hired a senior director of operations. She came from OTF Canada with 10 years of experience. So we
Who's that?
Her name is Alicia Alevsky. So she's our senior director of operations right now. Tremendous experience in the franchise world, also on the corporate side. So that's 50 years of management experience, specifically in health, wellness, brick and mortar studio. Our special sauce is, blending these services, which is complicated to offer under one roof, in a branded experiential fashion. There are other operators out there who have competitive services to us, who are, kind of in the lower, brand category, if you will, and don't really focus on the customer experience, don't really focus on experiential services. So what do I mean by that? When you come to pause, obviously there's a protocol, meet and greet, get somebody through into the studio and into their service. When they're and that is a qualified, what we call kind of health optimization professional who knows the science behind the services, why you should do it. We do extensive training on the science behind our modalities. The facility is beautiful. We work with, cutting edge architects for our design, which is not just making it pretty, but making it experiential from a lighting perspective, a sound perspective, a smell perspective. It starts with that when you first walk in. When you're showering in our showers, you're using Le Labo products, which is our premium, hair care, skin care product that is hard to find in any other, brick and mortar facility. You're drying your body off with parachute towels. You're getting served tea. Every member or client who finishes the service is offered complimentary reishi tea, which is high-end organic tea. You're refreshing with a eucalyptus, towel, a la Equinox. So all these touch points add up to value, extreme value. And our price point is very fair because we have 6 different levers we could pull on. So we don't have to be the most expensive offering in town. We can be very competitive, but you feel like you're walking out of or walking into a Mandarin type of spa experience. So I would say management team and the experiential offering that we have are really our 2 big brand differentiators.
Yeah, that's great. When you take a look at the health club operators who have potentially seen, group exercise go into their own, strip centers, and maybe they could have done that, or they could have been the Orange Theory franchisee in their area, let's say, or, some groups that are high end maybe could have said, hey, I could also have gotten a Blink, or I could have gotten a Planet, and I could basically own the market here on different modalities that are maybe now starting to get their own, and should have their own entrance and should have their own experience, because you can't just put this inside of a New York sports clubs or inside of a HVLP 2.0. So do you think maybe based on health club operators or, multi-unit operators seeing, okay, there's trends that kind of come and go and they kind of look similar, but they're different, that maybe some of the health club operators or some of the multi-unit, Orange Theory groups or multi-unit Massage Envy or what, those say, hey, look, why don't I go and get this? Because I'm basically going to do co-op marketing to the same member, and I already know what that member wants. Now I just got to give them a place to actually come to. Do you see that as a trend?
Yeah, I mean, the the candidates that are coming through, the early candidates that are coming into our process now are exactly what you said. Multi-unit owners. They own a franchise business already. Many of them are in the health wellness space, not necessarily fitness. Some of them are. They have the management infrastructure to design, develop, launch, operate, finance a business like Pause. And we're not competitive with whether it's Massage Envy or Hand and Stone or OTF or Blink. The list goes on and on. There's zero competitive nature there. We're 100% complementary. And I know after having multiple conversations with some of the biggest OTF operators out there and expo operators out there today, they see this as the next big movement, and they want it in their portfolio. They see it as 100% synergistic, and their members are asking for it.
Got it. And one of the things I just want to state, and then you can comment on it, because I think people need to think about franchising fees differently than they maybe had in the past. You know, a royalty that you're paying, if it's 6, 7, or 8% of revenue, you know, someone might say, oh, that's a lot of money. I'm doing $1 million. I'm paying them 70, 80 grand. It's like, well, you're basically renting a corporate overhead of the personnel that you just mentioned from Equinox, from Sports Club LA, from one of the largest Orange Theory, you know, operators. You're basically allowing yourself to access that type of talent. So you really have a corporate overhead that you're leasing for 6%. Because I want people to think about that differently as not, well, this is what the cost of operation is. Like, no, this is actually a rental stream on a 10-year corporate overhead that's going to continue to grow. And they're waking up every day not thinking about their 5 corporate locations, but 50, you know, 100, you know, 250, whatever it is. And that's really where the differentiation and an additional moat kind of comes into play. When there's an ad fund, there's development, there's innovation, there's, you know, research and studies. So as you think about the corporate overheads that you were a part of in the past and what you're building now, maybe just kind of, you know, add on to that commentary of, you know, answering that question of what do I get?
Yeah, you're getting the core team, which is ever and rapidly expanding. It needs to expand very quickly to support our franchisees. And as you know, the first phase to get opening is real estate design development. And then there's, you know, the opening and sales and marketing, and then the ongoing operation. So we recognize those different categories of the business, and we have a very thoughtful, detailed master plan, if you will, Excel spreadsheet and a hiring schedule to satisfy that demand as we start to sell our first units here in the next 60 to 90 days. And then we get into the real estate phase and then each one of the successive phases. Like I said, we just closed a $3 million round. A third of that specifically went to the franchise entity. So we're well capitalized, relatively speaking. You know, there are some out there that are much bigger and stronger and a little bit farther ahead of us, but average of averages for a new business that's franchising to have, you know, that kind of cash on hand to support the team. And, you know, the beauty about having 3, soon to be 5, very, very successful cash flow positive corporate units is that cash flow is going to pay for infrastructure costs to scale our franchise business. Let me be clear. We are going to have a handful of corporate owned units like most companies do, which is where you do your R&D and you do your testing, which we're in the middle of doing on a lot of different, you know, new modalities and touch points and product. We're about to get into the product space as well, which we can touch on. But we have the cash, we have the team, we have cash flow, a lot of it from our existing units coming in on a monthly basis to fuel and fund the franchise business. And we are going to be a franchisor. You know, that is the space we're playing in going forward.
That's great. That's great. Well, we'll have everything up in the show notes and how to contact you and your franchising team. You know, in closing here, you got any good business quotes or personal quotes, or, you know, dipping into your entrepreneurial war chest?
I have 2. One you've probably heard before that I borrowed from one of the best SoulCycle instructors, Angela Manuel Davis, and I know you've taken your share of SoulCycle class, and I have over the years. On the other side of challenge is change. And that is one that really, really resonates me. And the other one that kind of goes hand in hand, which I used to use with a former colleague, still a very good friend of mine at Equinox, is nothing good comes easy. When a deal was too much of a layup, or a landlord was kind of just rolling out the red carpet, we were always, red flags went up. And when you worked on a deal that had stops and starts, and you went backwards 3 steps and then forward 1 step and took forever to ultimately get done, those were the clubs that outperformed. So on the other side of challenge is change, and that can apply to your personal life as well as your business life. Nothing good comes easy, and I think you'll agree with that one.
Oh, definitely. Well, great perseverance and hitting the market, when you did, learning the business beforehand, there's no analogy to actually doing the work. You can't just get into this business now and think you're going to learn what you've learned over the last 5 years and turn that into a successful franchise. So I'll see you in person, and everybody check out Pause. And we are at location 5, so we'll do a check-in in 18 months, and we will make it the 500th podcast, and we'll see how many stores you're up to then.
Look forward to it. Thanks, Pete.